Yeah, Romaine, it's pretty interesting because that dollar yen, it had been at a 152. It's now closer to 130, a 14% decline. We've had that shock and awe, the element of surprise from the BOJ. Let's bring in Samantha LeDuc of LeDuc Trading into this conversation. And Samantha, it's so interesting because everybody's so focused on the Fed. What are they going to do? But you think that the BOJ may be the more influential player, at least in terms of volatility, looking ahead in 2023.
I do. I actually am more focused on the Bank of Japan. It does have a reign ending as far as Kuroda in his last meeting. I'm not expecting so much in that last meeting that's going to come up. But after that, that's about March 10th. But March 20th, I am more focused because they're going to also at the same time have their wage inflation report, and that is very much the enemy of bonds. So, but leading up to that, right, we've got 2 months to go. The long yen, long gold, long bond trade since the Bank of Japan yen intervention of size back on October 21st really kicked off this rally, not only in that currency and pulled back the dollar, helped support higher stocks, obviously higher bonds as well. But also very much tickled gold, and it just has outperformed largely with copper. And they have been, I believe, very tightly related to what the action in the yuan, the Chinese yuan, as well as the yen.
Yeah, well, that makes a lot of sense because, of course, we have the dollar weakness that will help those metals. And right here, we're taking a look at how volatility for both bonds and currency is much higher than that for stocks. So let's talk a little bit more about the dollar because the dollar has really descended well below that 200-day moving average, looking like it may go down more. And you are taking a look at the options on the dollar, suggesting that some investors out there, I believe at least, are bearish as well.
So I think positioning is very much bearish. There's no question about that. So there's very large short positioning in the dollar, but we can have always a two-way market, a short-term little bounce, which I think is pretty much in line right now. But again, this is still just a short-term bounce, which would also allow the gold to pull back. Gold has also filled its weekly gap fill, which for those who are technical analysts kind of look at that April dump in gold. It took a while for it to basically move back up, GLD 180. And the last time I was on the show, I suggested that financed call spread of selling the 160 GLD, buying the 170 by 180 call spread. That's worked. So now I think it's time for a pause. I think it's definitely a little dollar shimmy higher and then gold pull back. I like buying it again at 174 GLD. And then I still think the dollar yen will continue lower into that March Bank of Japan 20th event.
So if that happens, and it very well may, you've been great on your calls, and the charts certainly support it. I would think that a down dollar could really continue to light the fire beneath these risk assets because we have this. I mean, stocks are really off to a great start right now. If the S&P 500 finishes up on the year, it's had the Santa Claus rally the first 5 days. Historically, it points to an on average 20% rally. So this year really could be a good one. Will the down dollar be a piece of it?
I'm actually not bullish for the year. So my call is that we will have a short-term pullback in the dollar, could go all the way down to $98 Dixie. And although it looks interim bullish for risk assets, and right now we're definitely having FOMO since the beginning of January with a short covering rally, and it's very solidly a growth rotation, I believe it's actually going to be a fake breakout fast failure, and we will have one more sizable leg down in tech specifically this year and take out the lows of 3,600. So I don't have a bullish bent for this year, but I do for right now.
Well, interesting. I think you're in good company, the company of Mike Wilson over at Morgan Stanley, who I think that there's more pain ahead, and then maybe 2024 will be better. Samantha LeDuc of LeDuc Trading, thanks so much for joining us for Options Insight today. And from New York, this is Bloomberg.